Hello traders, welcome to another episode of my video. In today's video, I'm gonna take you through and dive deep in what Forex order flow is and how you can make use of it to take trading decisions to your advantage. Before I move on, if this is your first time in this channel, make sure you hit the subscribe button, subscribe to this channel, and turn on the notification icon cause I have more useful content like this to share. When you look at the screen here, what I have here, the drawing I have here, what is Forex order flow in the market? As a technical trader, how can you recognize order flows in market? Order flow simply means just the flow of the market, or you can say the real-time buying and selling activities that moves price in the Forex market. So just the flow of the market. Now, when you look at the chart here, previously in my video, I talked about different kind of market movement, market structure. We have prices. Sometimes when price in a maybe when price is in a bearish move, sometimes price had a deeper retracement in the market. Some people call it market profile. When price is having a deeper retracement in the price in market, and sometimes you have price not making deeper retracement, just retracing at the previous order flow and started continuing to the downside. So this point, when price started buying in a bearish move, before we have a sell, we start having sell orders here before the the suppliers starting gain control. So this range is what we call the order flow into price in the market. Now, when you look at this, at this exact point we have here, to this point is what we call the order flow in the market, because these are the points where we started having more demands in the market before the suppliers started gain control of the market. So this is the point where we started having more demands in the market before the suppliers started gain control. So this point becomes our order flow. In a bearish move, remember, in a bearish move, so this point becomes our order flow. So same thing, likewise this point, yeah. This is the other point where the buyers gain control before the sellers started gain control back, which are the suppliers, before they start gain control from this point to this point. So these are the points the buyers started gain control before the suppliers started gain back the control, and we have a bearish move here. So from this point to this point becomes our order flow. So these are order flow in a bearish move. So call it the order flow. And some people use this strategy to trade. They call it the break and retest strategy. When price break their previous low or a previous high in a bullish move and come back to mitigate the previous supply or demand level and started retracing from that point, and maybe they have a momentum shift, they open and they call it the break and retest strategy. I want to show us a more advanced way of trading this kind of situation, because some traders are only the kind of trading strategy they are used to is to wait for price to come to maybe their supply level or their demand level before they take any trading decisions. And if you look here, before we have a price shift from bearish to bullish here, when you look at this point, this is the last point the sellers gained control in the market before the buyers started pushing price back to the upside. So this point is what we call our order flow from this side to this flow. So these are what we call our order flow. These are our order flow in the market. Because when you look here, there are a lot of institutions orders sitting inside of this range. So that's the reason why sometimes you see when price mitigates our order flow, price started retracing to the upside, because there are a lot of orders sitting inside of this zone, inside of this range. Because not necessarily until price reach our extreme point before price can continue to be upside. No, there are orders sitting inside of this range. That's why price can mitigate your order flow. They can just fulfill part of the orders they have inside of this zone and then push price back to the upside. So this happens most of the times in the market. And same thing happens here. Price broke out of this order flow, price just come back to mitigate our order flow and continue to the upside. I'm going to take us through a rechart example so that we can understand better. Now, when you take a look at this chart we have here, when you from this point, we're actually in a bearish move. This is a USO chart, so we are in a bearish move in the market. When you look at this point in the market, before price started retracing from this point, price is making use of order flow to push price to continue to the upside. As you can see here, price makes use of order flow here. Immediately price mitigate this order flow. What happened? Price started continuing to the upside. And same thing happens here. Price mitigate our order flow without even grabbing any form of liquidity. So I'm going to dive this into this. So, and same thing happens here. Price just mitigating our order flow, and what happened? Price started continuing to downside. But this way I'm going to break it down for us. So when you look here, from this point that price started retracing, price pulled down a little bit, go up and break this low. So immediately price break this low, we have what we call price mirroring in the market. Price, or let me just say, can I say price mirroring? Yeah, price mirroring. So when price replicate previous price actions, that's what happened here. Previous thing that happens here, it replicates itself here and also replicates itself somewhere around here. So now when you look at this, I'm going to break this down. Immediate price broke this low. Immediate price broke this low. We have our what? We have our supply level here, unmitigated supply level. Now continue to the downside. Let me just zoom this so that we can see clearly. Now we have our unmitigated supply level here because price already mitigates the higher supply level and price is about to retrace and to reverse to the downside. Now our price broke this low. Immediate price broke this low. This becomes our supply level, mitigated supply level, and now we have another pullback here. Maybe we have another pullback here. Rather, immediately we have another pullback here. We have a pullback here, which is our inducement point, which we can make use of for entry. If you haven't watched my previous video as touching inducement, you can head over to my channel. You see my playlist, which I have all the tutorials as follows. So and look at this pullback here. So immediately we have this pullback in market. That's when we're expecting price to take out our inducement, then we can open. Now price can took out your inducement and started retracing in the market. Why I teach in my previous video, price might even take out your inducement and still go up to mitigate maybe your inside your order flow. Remember, this is our order flow. We're already inside this order flow already. Remember, so inside of your order flow, price can mitigate your order flow and retrace. Price can mitigate maybe inside your order flow there's an imbalance. Price can come to mitigate your imbalance inside your order flow. As you can see, we have imbalance here inside this order flow. We have imbalance at this point. So everything is inside your order flow, and inside the order flow, price might come up to mitigate maybe your supply level or your demand level. So immediately price took out your inducement in the market, then immediately you start looking for your entry, and your entry point can be immediately price mitigate your PY. Then your PY can be immediately price mitigate your order flow. It can be imbalance, it can be supply and demand level. So when you look what happened here, immediately price took out this inducement. We have another inducement at the point. At this point, we have another pullback here. At this point, price took out the inducement, most free inducements, and mitigate this order flow. Went up inside this order flow to mitigate our imbalance, which we have here, but failed to mitigate our supply level. So if you are this kind of trader who is waiting for price to come to maybe supply level before you open on trade, you probably miss out on this trade. But immediately price is in our order flow, mitigating our imbalance, then what happened? And we see a momentum shift, then we can open and sell at this point. We already see a momentum shift, then we can open and sell at this point here. Now this will be our first entry. and targeting this low, and now we have what? We have a break of structure. Price pullback at this point took out our inducement, because before this break of structure, we have a pullback at this point. So price took out our inducement at this point, mitigate our supply level, which we have here. Remember, this is our order flow. Price already comes back into order flow because we don't have a more push to the downside here. Price go back instantly. So remember, this is our order flow. This is our order flow. Now, when you look here, price comes to our supply level. Price didn't even mitigate this supply level. Now, if you are this kind of trader who is trading, making use of supply level only and demand level, you'll be missing out. You eventually miss out on this trade too. Now let's go on. And we have price continue to the downside here, break out of this level, then this level becomes our order flow from this point to this high, this point. Our order flow. Now let's continue to look at price. Now price continues to the downside, fail to come back inside of this order flow. You see what happened here? And price break this low. Break this low. We have our inducement point here. We have our inducement. This becomes our inducement point. Now we don't have any value pullback here. So even after we break this low, we don't have any value pullback here. So as you can see, we don't have any value pullback here. It doesn't take out the previous candle. I think I haven't make video about this value pullback. So this is why you need to subscribe so that you stay updated. Each time I publish, I'll be making videos as touching this value pullback in the markets. How you can recognize value pullback and internal pullbacks, or maybe let me just say value pullback and inside back candles. When you look here, it may price continue to downside here. Our inducement shift from this point back to this point, so we can't take any trading decisions yet. Now we need to wait. And price continue. We don't have any value pullback here. Price continue, no value pullback here. And price pullback from this point to grab our inducement. So you may price grab this inducement. We have, don't forget, we have this order flow here. We have our order flow here, which is not even yet being mitigated. It has not been mitigated yet. Our order flow is there. Our supply level is there. But we are not, this video is not about supply, how to trade with supply level. Yeah, it's about how to trade it with order flow. Now, remember, inside of this order flow, we have imbalance. I think I already made a video about how to trade with imbalance. If you haven't watched the video, go on my channel. You see the video how to trade with Forex imbalance. Because when you see here, anytime you have your order flow crossing with your imbalance in the market, this is high probability setups in the market. Anytime you have your order flow crossing with imbalance, when you have a setup like this, when your order flow is crossing with your imbalance and you see price coming into the 50% level of your imbalance, closing back below it, I mean, this is a high probability setup. So now price took out inducement at this point, close below it. Similarly, we have a momentum shift. So this tells us price is ready to go to the downside before this candle close, or maybe after pullbacks. But for me, in late price come to my price grab inducement. This is when I go to lower time frames to take my entry for confirmations. Because when you wait on the higher time frame, sometimes price might have moved a bit away from that zone when you can have a nice entry before you can even realize or even take your entry. So these are part of the things I explain in my mentorship class. Immediate price grab inducement here, and what happened? You have a momentum shift, then you're paying you sell at this point. Now remember price failed to come to our order flow, and price continued to the downside. Now when you look here, you see that price took out inducement at this point. Immediate price took out inducement at that point, failed to continue to the downside, go up. And let's say even after we have a momentum shift, if you are some kind of trader who take trade on the higher time frames, immediately see a momentum shift and you put your stop here, your stop is probably going to be it. Your stop is probably going to be it. So these are kind of the things I share in my mentorship class so that you will avoid all these common mistakes. So you won't fall into these institution traps. So in my mentorship class, I break down how you can wait even after price grabbing liquidity, how you can wait, how you can scale down to the lower time frame, which is on the 15-minute time frames, to wait for confirmation, which is the advanced confirmation entry before you take your trade. So these are part of things I break down in my mentorship class. If you want to be part of it, you see the link to my Telegram channel in the description of this video. Yeah, or even my Telegram DM when you can send me a direct message. And price continue to the upside here, taking out this I one more time and take out this major I, because if you can realize we have a break of structure at this point. Now this way getting it interesting. We have a break of structure at this point. Now price grab external liquidity. Remember this I becomes a major I. Price grab external liquidity at this point. It may price grab external liquidity at this point. Remember the reason why things like this happens, we fail to have a chalk here. Now we fail to have a chalk here because if price close above this line and we have another candle close, we have a value chop, but price failed to close with another candle. Now this tells us this is just an external liquidity graph. I also make video about this. Check my channel. So when you look at this, price come back to our previous order flow we have here. Just mitigate the order flow and started what? And started retracing downside, and we have a momentum shift. And you also realize that we have our imbalance in place here at the same time. So this is the reason I say sometimes when your order flow comes in line with your order flow cause your imbalance in the market, these are primary setups. And you can see immediate price come almost go to the 50% level of your imbalance, and what upon price retrace to the other side, we have a momentum shift. Now when you look at this, what I'm going to, this is the other point I'm going to, immediate price grab multiple inducements in the market. Remember this is the tip I want to share. Immediate price grab inducement from this point, the first inducement from this point, and even external inducement from this point. Price don't need inducement anymore to move for a period, for a, or let me just, for a certain period of time. So you need to open the market now with your order flow. You don't need to wait for price to come to your supply level or price to grab inducement anymore, because price already grab inducement from this point even multiple times here and here, and even grab external liquidity from this point. You see, external liquidity. Now you don't need to wait for inducement to trade anymore. You just need to keep on entering the market, to enter the market with order flow. So now immediately we have a external liquidity grab here and price retrace with a momentum candle shift. You open immediately. Remember we have a momentum candle shift. Now there are other advanced entry strategy to this, which I share in my mentorship class. Remember now, and we have market break this low. We have our order flow here. So now you must have set another entry here. Immediately we have a break of this low. We have our order flow. Immediately we have a break of this low, our order flow here. You must have set your entry because price already grab multiple liquidities here. So we don't need to wait for price to grab liquidity anymore. Price has already grabbed multiple liquidity. Remember that. So then you set your stops at this high from your order flow and you set your target to the downside. So that's just the trick. Immediately price grab multiple liquidity before price retrace or before price reversed. You don't need to wait for inducement anymore. But if price is already moving, maybe price already reaching to the downside, as you can see price already pull back here, drop multiple times, and we have another order flow here from this point. We have another order flow here. So now price already moves a while for multiple hours, because this move I'm on the 4-hour time frame now. This move will take like this. So price has already moved for a while now, so we can't make use of trading with order flow anymore. Then we need to wait for price to took out inducement, because here price recently took out external liquidity and even take out multiple inducement from this point. So now we don't need, I just want to make this very clear for us. So we don't need to trade with inducement at this point, but since price has went further to the downside, then we can now start to wait for price to take out inducement before taking our trade. Now when you look here, you see that we have another order flow at this point. But why this doesn't work? Because price already moved a little bit before taking after taking out this previous inducement, so we can't make use of this order flow anymore, and it is even near the previous low level that we need to um which is our target. Some people might target this low and some people might target this low, so people will already be taking profit. Now when you look here, price gap inducement at this point, the immediate price gap inducement at this point, remember we are not making use of order flow anymore, because we don't have any recent liquidity grab. So since we don't have any recent liquidity grab at this point, we are not going to make use of order flow. Then we wait for price to take out inducement before we take actions. And price come back into our order flow we have here. It'll come on to the extreme point, which is your supply level. Price comes to your supply level here. And what happened? Price started tanking to the downside. And even one more time, price mitigate. You see price gap in this mint here already, grabs in this mint here already, and pullback mitigate our supply level, went down, and we have a pullback here. I think we have a pullback here, a little pullback at this point. So price already grabbed liquidity from this point. So immediate price grab liquidity from this point, mitigate this order flow, and mitigate this supply level here. And what happened? Price went down, and price doesn't need to even grab liquidity anymore or inducement anymore. So immediate price come back inside of this order flow. What happened? Price just mitigate this order flow, and what happened? Price went down to the downside, and at the end, breaking this structure. Yeah, this structure, this previous structure, which is the main structure. You see? So I would like to share with us one more example. Now, when you look at the second example we have here, here is a USD CHF chart on the 4 hour. Now we have price taking out liquidity from this point. From this point, we are in a downtrend, in a bearish move. Now we see price taking out liquidity from this point, from this inducement, short this inducement, went down to break structure. Now immediate price break structure at this point. What happened? This high becomes a major high. This also becomes a major low. This high becomes a major high. And we have our inducement, immediate price break structure here. We have a pullback here, our inducement here. And you can see all these candles are inside by candles. Some people will mark this point as their supply level, which is very wrong. You know, some traders who doesn't understand this structure and this trap, because when you look at the low of this candle, the low of this candle and the high of this candle, they are all inside this momentum candle. So all this move we have here, they are all inside back candles, and all these are just inside back candles. So we can't make use of it. So our supply level is here. We have our supply level right here, which is right here. Our major high is here. Now these are part of the things. Maybe in my I'll take my time in my maybe in my next video I'll explain how to spot a real pullback in market and all these inside back candles in market. I'll make a video about that. So you need to stay updated and subscribe to the channel, because I'll be making videos about this next. Now, when you look here, you made price gap inducement from this point. Price went on, even get to our supply level and failed to continue to the downside and take out this high, which we'll call our chalk. which will call our chop. But remember, price doesn't follow one single time frames. Price doesn't follow one single time frames. I already explained this in my previous video because your major level on the 4-hour time frames might be an inducement point on the daily time frames. So this is the reason why when you want to analyze market, we analyze on the higher time frames down to the lower time frames. So these are things I explain in my mentorship class. If you want a part of it, you see the link to my Telegram in the description of this video. When you take a look at this, so price come here, mitigate maybe higher time frames, POI. So immediately price mitigate higher time frames POI, price revert to the downside. And after price reversing to the downside, what happened here? Price pull back, pull up again, mitigate this previous candle. We have no supply level here and price break this low. Then this level becomes our order flow. Now immediately we have multiple from this low to this high. We have our order flow here. Now take a look at this. Immediately we have inducement strip at this point, and we have even external liquidity being grabbed at this point. As you can see, price grab external liquidity from this point because price failed to continue to the upside and reverse from this point. So price grab external liquidity from this point. This point we have a chalk because sometimes we can have a chalk on the lower time frames, and then this point might be your higher time frames inducement point. So price grab multiple liquidity from this point. Then we don't need inducement anymore to trade, to open on the trade for a short period of time. Remember, because this is a recent liquidity grab, so we don't need liquidity anymore to open on the trade. You don't need to wait for liquidity grab anymore. So you just need to continue to open on the trade with your order flow. Don't wait for market to come to your supply level, because if you are waiting for market to come to your supply level, you might miss out big time. Now, if price break this low, price comes to our supply level, and we have another sell move here. And if price break this low again, price come back into our order flow here, and we have it, and price started selling. And when you look here, you see that we have a supply level here, which price doesn't even mitigate. Price failed to mitigate this supply level. We have it at this high. You can see price doesn't mitigate this supply level, and price just come into our order flow, which in line with our imbalance at this point as well. But that's one way we're going at. So when the price come back inside our order flow, price retraces back and started selling, but price failed to mitigate what our supply level. So if you are this kind of trader who is waiting for price to come to your supply level before you sell, then you're probably going to miss out on this trade again. And even here, because some traders will be waiting for price to come maybe to this high or whatever, even if they don't know price has already mitigated this supply level that we have here. Now, what happened again? Price continues to downside and break this low, then this point becomes our order flow. Remember, the main reason why we are making use of order flow is because price already grabbed multiple liquidity from this point, because many traders will trap here. Because even at this point here, some traders will take this as supply level, they will also be trapped. And some traders will be marked here, and even a lot of traders will be trapped at this point. So they have grabbed a lot of liquidity at this point. So that's the reason why they've just pushed price down the downside. And a lot of traders will even miss out on the trade if they are waiting for price to come to their supply level. And when you look here also, we have another supply level here. So price failed to come to the supply level. Now, price just mitigate our order flow. And continue to the downside, as you can see, and we have a break of structure here. Now, I would like to say this one more time. You can see we have another sell trade here, another sell trade here at this point, and even at this point with your order flow. Now, I'd like to remind you this. The reason why we are making this order flow is because recently price grabbed multiple liquidity coins from this area. That's the reason why. If not, we'll wait for price to take out inducement before we take any trade decision. Now, when you look here, when price continues to the downside, price doesn't come to this supply level as well, even at this point. But what happened? Price took out the inducement we have here. Immediately price took out this inducement, Price took out this engagement and started selling to and started selling, and we have a reversal. Price started selling. Now, this is how you can make use of order flow. So once you understand this concept, you'll be able to start looking for entries anytime price take out multiple inducement points in the market. So when price gap multiple liquidity points in the market, then you start looking for entries starting from your order flow. You don't need to wait for until price comes into your maybe until price comes to your imbalance or to your supply demand level. You don't need to wait to that until that, so that you won't be missing out on you won't be missing out on trades. So this is how you can make use of order flow effectively. I hope you learned something new into this video. Make sure you use the subscribe button, subscribe to my YouTube channel, turn on the notification icon so that you won't miss out on my upcoming videos. And also make sure you hit the link in the description to join my Telegram channel. You can also follow me on Instagram ASIWAJUFX. And to watch the next episode of this video, you see the link popping up in the on the right corner of your screen right now. Click the link to watch the next episode of this video. Until the next, peace out.